FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to and perhaps even watching the Financial Survival Network on YouTube and on our podcast. I'm Kerry Lutz. Today is 10/27/20 and got Andy Schectman on. He runs Miles Franklin, the only place where I go to buy my gold and silver. And well, there's been some developments. Got the IMF making a call for a new Bretton Woods agreement. What could that possibly mean? And we've got suddenly it appears we're going to have digital currencies breaking out around the world. What's behind that? What are your thoughts? Why don't you email us, kl@kerrylutz.com, or put comments down on the website or on the YouTube channel. So, Andy, it's great to have you back. So, 2 interesting developments, seemingly unconnected, but yet everything is connected, isn't it?
Yeah, Kerry, it's good to be back. It really is. And that's a lot of what I want to talk about today. I want to lay the foundation, kind of show you a roadmap that I see that symbolizes, or I think exemplifies this roadmap that connects everything. And it goes back several years now, but I think if we look at it closely, take a step back, we can see how the interconnection really is becoming more and more and more transparent. At least it is to me. All
right. So take us back when this roadmap started revealing itself to you, Andy.
Sure. So, okay, we go back to, let's call it August or September. It was summer of 2017. You had the German Bundesbank in a press release. They mentioned a 2020 hard deadline to get their gold repatriated, right? So Germany mentions, I think quite tellingly, a 2020 deadline to repatriate all their gold. Shortly then followed by the Bank of Austria, the Dutch Central Bank, the Bank of Poland, the Bank of Hungary. All of these Eastern European and Western European countries were in a rush, if you will, to repatriate their gold, get it out of the London Bullion Exchange, get it out of the New York Fed, and take possession of it back home. And, you know, in 2017, when this admission or declaration was made, the central banks were net sellers of gold, Kerry. And one of the things I've really harped upon this entire year, to the point of redundancy, is the Basel III reclassification of gold. In 2017, as I mentioned, as they're all bringing their gold home, they were indeed, at least it appeared, they were net sellers of gold. But in 2018, those same central banks bought more gold as a group than they did in the 60 years previously combined. In 2019, the Basel III reclassification of gold came into play, levying gold to a Tier 1 asset from a Tier 3 asset, putting it on par with the only other Tier 1 asset in the world, U.S. Treasury. In April of 2019, at the exact same time gold was reclassified, the Dutch Central Bank, here, let me pull this up here. The Dutch Central Bank said, gold is the anchor of trust for the financial system. If the system collapses, the gold stock can serve as a basis to build it up again. That gold bolsters confidence in the stability of the central bank's balance sheets and creates a sense of security. So you have the banks talking about if the system breaks down in preparation for this 2020 deadline that they're all talking about. You then have the Basel III reclassification of gold. Then we fast forward to what we've seen here recently. We see on the Comex, we see this group called others, right? And others are somewhat clandestine. They trade on the Globex, which is reserved really for the wealthiest people in the world. And they're all standing for delivery, which is really different, Kerry. They're all standing for delivery. We are seeing as much gold taken off the exchange in a month by this category, the others, which I would classify as sovereign wealth funds, high net worth individuals, large family offices, they are all standing for delivery, pulling it off of the exchange, right? So they're pulling it off the exchange, standing for delivery, and we are seeing as much gold delivered in 1 month as we have seen in years before. This is crazy. This is really, really unusual. Okay, and then a week ago, we see the International Monetary Fund, which was formulated in the 1944 Bretton Woods meeting. They formulated the International Monetary Fund, which is a conglomerate of about 195 countries. And they came out last week and said, we want a new Bretton Woods. And get this, do you know that every single year, the World Economic Forum meets, I believe it meets in Davos, Switzerland. I'm almost positive where they meet, but I know it's just a few months away. Do you know what the name is this year, Kerry, for this year's meeting?
Global Reset.
Reset, right. And then just the other day, the Federal Reserve put out 2 press releases about large banks. One read, agencies finalize rules to reduce the impact of large bank failures. And the other read, agencies issue final rules to strengthen resiliency of large banks. You put it all together, Kerry, what you are seeing is the most influential, well-funded, and well-informed players on the globe removing counterparty risk, taking possession of their metal, which was reclassified by the central banks as the only tier 1 asset in the world next to U.S. treasuries, for which they're all de-dollarizing. All of these big players are selling dollars to buy gold. And on top of it, you see the IMF requesting a new Bretton Woods. And remember, the tier 1 status or tier 1 status of treasuries came about in Bretton Woods in 1944. So all of these things that comprised the backing of the system are coming undone and being called for a new system. When you see 195 countries saying we want a new Bretton Woods, when you see the World Economic Forum's title for their new meeting, the Great Reset, when you see the most sophisticated players on the Comex who are hidden, but we know that they're wealthy enough to pull massive amounts of metal off of the exchanges, taking possession of it, removing counterparty risk. When we see the central banks talking about what would happen if the major banks fail, we are entering a period of time, Kerry, where the biggest question needs to be asked, not how much gold and silver should we own, but what exposure do you want to a currency that it's on its last legs? You know, if we look at every world reserve currency going back to the 1400s, you'll see just about every currency has a 40 to 50-year lifespan, and that is about it. If you look at us leaving the backing of gold in 1971, where does that put us? Puts us at 50 years on the horizon. We are at the tail end of what has historically a world reserve currency's run. Kerry, I try to be objective in everything that I do. I try not to sensationalize anything. But when you look at what all of these players are doing, starting with reclassifying gold after 80 years of it just being treasuries and gold being a tier 3 asset, when you see the IMF call for a new system, a new Bretton Woods, when you see all of these countries pull back their gold out of the Comex, when you see massive amount being taken off the Comex, when you see a great reset on the horizon by the World Economic Forum, these are all crumbs that they leave behind so that they can look at us and say, what? We told you what was coming. Didn't you see the crumbs that we left for you? They always leave a little trail so that they can say, hey, we weren't disingenuous about this. We made it known. The only problem is that our media is pathetic and doesn't tell us anything that's important. We have to listen to people like you and to others out there who give non-biased, real information that people can make their own educated decision for. But I will simply tell you this. It is my opinion that the surest way to financial ruin right now is to be wholly dollar-based in terms of investments in stocks trading at all-time highs, price-to-earnings ratios with 45 million people unemployed, a bubble. Bonds at the tail end of a 25-year bull market with interest rates at zero, approaching zero, issued by, in this case, the United States, a all but insolvent government. That's an uber bubble. Real estate, which is a function of interest rates, another bubble. Where do you put your money safely? Well, I look to what the most influential and in the know and well-funded players on the planet are doing. They're putting it into metals. So, yeah, I think the roadmap shows us that the dollar is nearing its end and that metals are taking on, especially gold, is taking on a central stage, approach to what's coming next, Kerry. I think it will be central to what comes next. I believe that in my soul.
Also, if the dollar is going, that means all the other fiat currencies in the world are going with it.
Yes, it does. Absolutely. And that's part of, if you take a look at what COVID has been, you could make the argument that they all understood this and they were all going to blow up their economies simultaneously at the same time, blow up their currencies simultaneously at the same time to allow a new reset ahead of 2020, as Germany called it, a hard deadline to repatriate their metals. I'm not saying that there was this big conspiracy to unleash a virus in 2020 to blow up the system. But when you take a step back and you look at it impartially, it's really hard to not think that. All of these preparations made in advance of 2020 and all of the Western Keynesian-based economies given a green light to blow up their economies and their currencies due to this horrible virus, it just sets the stage for global acceptance of a new system, global acceptance of all the currencies racing to the bottom to blow things up, to soak as much as they can out of the current system until the new one comes around. So yeah, if I were a conspiratorialist, I would say hell yeah. And I'll also tell you that there's a real fine line these days between what is conspiracy and what is reality. Maybe it didn't play out that way, but maybe they realized real quick that, hey, this is our chance. This is our chance to blow it all up. It just makes too much sense to me, Kerry, that every single Keynesian-based system is blowing up simultaneously and given a pass at doing so, and will be given acceptance by the masses to accept a new system that rises from the ashes of the old.
Yeah, so what's going to happen to all the debt that's left? Is it just going to be extinguished, gone, forgiven, or what?
A lot of people ask that. I could see the government debt being extinguished or forgiven. Remember that for every debt it's an asset to someone else. Someone's debt is someone else's asset. And we take a look at real estate in this country. I'm not going to get this number right, but it's close. Roughly 50% of the investment real estate in this country, apartment buildings and the like, are owned by small businesses. You are screwing small businesses across the globe right now, or across this country, I should say right now, when you realize that there has been no kicking people out of their apartments, or there has been no kicking people out of their living spaces, yet there hasn't been any concessions made for the people who own the property. They still have to pay their taxes. They still have to pay their insurance. They still have to pay their mortgage. And this goes on till the end of the year. Can't kick anybody out, right? Well, that debt forgiveness or extension for bonus is someone else's asset who's getting the shaft. And so I can't imagine that they will forgive private debt. I could see them forgiving government debt amongst governments, but to wipe the debt slate clean, I think would bankrupt too many people. And I think to find concessions would be all but impossible. So no, I don't think that will be forgiven. It might be mitigated. Some of it may be, helped along by the Fed and their incessant money creation. I mean, look, the Fed could take all the worthless debt and put it on their balance sheet. What do they care? And just create a new currency, a new digital currency, and create an entry. So in theory, maybe the central banks come in and take everyone's debt on their balance sheet and allows everyone to start over. That would be the only way it would happen, so that they can come in and make whole the small businesses who own 7 apartment buildings that are, haven't gotten any rent payments in months and months and months, or whatever it may be. I think that's the only way it happens, if the central bank comes in on a white horse, takes everyone's debt, puts it on their balance sheet, and gives everyone new entries in the ledger. of a new digital currency for the new system to begin clean and debt-free. Other than that, no, there's no way it works out or too many people get the shaft.
Okay, so digital currencies, they seem to be breaking out all across the world. Is that what we're seeing here?
FSN Radio. It's all about what's next.
Today's show is brought to you by GR Silver Mining, ticker symbol TSX, GRSL, OTC, GRSLF, and their website at grsilvermining.com. The company is extremely well capitalized, currently has a resource of 40 million ounces of silver, and is looking to triple that number in just the next year alone. Its management team is first rate, headed up by Marcio Fonseca, a geologist with vast experience in mining operations and the financial sector as well. With all this going for it, and with silver trading over $25 the ounce, there's no telling how high GR Silver Mining will go. So go to grsilvermining.com to stay up to date on the latest developments and get on their notification list today.
The Financial Survival Network. It's all about what's next.
Yeah, I think so. You're seeing it in Sweden. You're seeing it in China. They just came out with a new digital currency. As I have talked about before, Nancy Pelosi asked for it in her House Subcommittee Finance bill in March, although it was turned down. I think that is arguably one of the reasons you have seen gold reclassified as a tier one asset. That is arguably one of the reasons why you're seeing the IMF call for a new Bretton Woods. So you issue a new digital currency that will allow the Federal Reserve to enact its policy. You see, right now, and before I go down that road, let me just quickly finish that thought. I think that is why gold was reclassified. I believe it will be tied to a new digital gold dollar or a new digital gold yuan, or maybe both, or a BRICS nations currency tied to gold, so that there is some sort of people will give it credibility, because if not, no one will ever drink that Kool-Aid again. But if you look at why the Fed wants a Fed wallet or a Fed coin, they've talked a lot about it. You know, everyone talks about the Fed and what they've been doing in terms of it being hyperinflationary. Yes, they have increased their balance sheet through the relationship with BlackRock and the commingling of the Fed and the Treasury. They have been able to go out and buy stocks and buy bonds and keep the low end of the back end of the bond market, the interest rates low, to keep valuations high. They've gone and they've bought stocks and ETFs to keep equity values high, so people feel enriched in the wealth effect in their home values and their 401ks. But what they haven't been able to do is create inflation. When the Fed does quantitative easing, it's not inflationary, it's deflationary. People don't understand that. It's deflationary because they are buying bonds from the member commercial banks, who then, instead of getting that money, the commercial bank has to deposit that money in a reserve account at the Federal Reserve. The only way they can access that money, and the only way that inflation happens, the only way that currency creation happens in the real world is the process of making loans or lending. And so when the banks are not lending, go back to 2019 September, the repo market crisis, the banks' balance sheets have been in tatters for over a year. So the last thing they want to do is make loans and increase their balance sheet, when half of the loans they've made over the last 12 months and longer are to corporations dead and or dying. Their balance sheets are in tatters. So what are they doing? They are holding that money. They're holding it really tight, not letting it go, sitting in reserve accounts at the Federal Reserve. So the Federal Reserve monetizes bonds in an attempt to get money into the system, but the commercial banks aren't playing ball with them. They are not lending. And so as a result, money velocity is the lowest it's ever been. So how do you usurp that? How do you get money directly into the system and give it velocity, create inflation? Two ways. One, you create a Fed wallet that usurps the commercial bank lending process, and you deposit money directly into your Fed wallet and into my Fed wallet without going to a bank to take out a loan to buy a car or build a house or to put your kids in school or whatever it may be. That lending process, that borrowing process is what creates money. That's money creation. Well, if you're not doing that, there is no money creation. There is no velocity, no matter how hard the Fed tries, unless they are able to deposit it right into our Fed wallet. And number two, and this one's a little bit more out there, but I guess if you really want to create inflation quickly, let's just pretend we all had our Fed wallet right now today. They could say, we are depositing $5,000 in everyone's Fed wallet in an attempt to spur the retail sector going into the holidays. But if you don't spend that money by Christmas, December 25th, it all expires worthless. Everyone would run out and spend the hell out of that money. Now you got inflation. Now you got money velocity. But short of something like that, the process now, which requires lending money to get it into existence, is dead on the vine. And that's why we are not seeing inflation broadly visible. Oh, we're seeing it in places like food, tuition, healthcare, and even energy. But to see broad price inflation, we will need to see greater money velocity. And the only way that happens, right now anyway, is by the Fed getting its wishes and seeing a digital Fed dollar that everyone has directly sidestepping, usurping the commercial banks. And I think that is for sure on our horizon, Kerry. Scary times, if you ask me. These are scary, uncertain times that I think people need to wake up and realize that we're not getting the scoop from the mainstream media, not even a little bit.
Yes, wake up and smell the latte, right?
Yes, absolutely, 100%. I will tell you, it's interesting. In the past few weeks, I've had 2 banks call me about investing gold. 2 small community banks. Well, a small community bank, $10 million is a small trade for a community bank. My point to you is that banks here in the U.S. are now waking up to the tier 1 status of gold, to the sucker's game that is the bond market, and to where do I put my money with safety that is being inflated away, and with interest rate risk, with default risk and market risk in the bond market. Well, I think they're moving away from that too. So yeah, Kerry, I think the biggest question people should ask is not how much gold and silver should I own, but what exposure do I want to a currency that's at the tail end of its 50-year lifespan? And I think that is a more important, relevant question to be asked.
And I wonder what happens to stock markets, what happens to these gold mining companies that we've all come to really love. I think they're still moving forward because they're effectively becoming the new central banks of the future. They're actually, rather than printing currency, they're mining currency.
Yeah, well, if you look at a guy like Warren Buffett, who put 2.5% of Berkshire Hathaway into American Barrick, this is a guy who wasn't a gold bug, but who realizes the value of it. And so I think that the mining share industry, the commodity complex in and of itself, is arguably the most undervalued sector on the planet. Now, in terms of the overvalued stock market, I see it going higher, at least temporarily, because the Fed will do whatever they can to keep asset prices high. If Biden wins, however, and I'm making no assertion of any belief, but if he wins, I think the market's dead, because you got a guy here who is going to raise taxes on corporations and raise the capital gains tax. So if I'm a John Q investor, or John Q very wealthy investor with a very, very big stock portfolio trading at all-time highs, with price to earnings ratios in stratospheric level, completely detached from Main Street, I see you got New York City in your background. Go walk down Fifth Avenue. Go walk down, go into Soho and look at the big shops. They're empty or boarded up. The economy's dead, yet the stock market's saying it should be vibrant and growing. It's detached. So if I were someone with a massive portfolio of stocks and Biden were to win and I got all this profit, and I think even the most ardent stock bulls will tell you that this doesn't make sense, that the market is trading at these levels when the economy's dead and dying. And even if all of a sudden there's a vaccine that everyone takes and the economy opens up, how much damage has been done? I would argue that the market collapses because people will take their profits rather than risk a market crash or correction on top of massively higher capital gains taxes that will come into effect in January. I think December will be a very scary month in this country, because even if Trump wins, and I hope he does, you're going to have the rioting and the pitchforks and the looting. I live in the epicenter of stupidity here in Minnesota. I watched what happened this summer with horror. This is a country I used to be, or a state rather, I used to be really proud of saying I was from. And now I'm looking rapidly at leaving the state, finding somewhere else to go. I'm embarrassed of where I live. I'm embarrassed of our politicians. I'm embarrassed of politicians who have called for defunding of the police. I'm embarrassed to what's happened to my city, and it was allowed to happen. And I think if Trump wins, God help us, blue states, because I think it will be rioting, looting, burning, more of the same. And if Biden wins, God help us all, because I think you're looking at an economy that will collapse under his plans and his regulations and his rollback of the Trump tax cuts and all of the problems that will come with his platform. So I think we're kind of damned if we do, damned if we don't, at least in the short term. But I would certainly hope that we don't see that at least for another 4 years, and Trump gets to have another 4 years in office, so that we can at least try to mend our way through this without a socialist agenda at hand. So it's going to be a very interesting few months, Kerry, but I'm concerned about December.
Yeah, well, rightfully so. Well, I think we'll leave it at that. So if interested in buying bullion, I can't think of anybody else who I'd recommend other than Andy and Miles Franklin. Tell us, Andy, where to connect with you, how to reach you and order.
I just want to remind your listeners, and I know I say this a lot, but we are the only state in America, the epicenter of stupidity here in Minnesota, where you have to be licensed and bonded. We have a 7-figure surety bond. We're background checked, every employee and principal, myself included, every single year. And compliance and continuing education that has more or less made every one of my peers in the industry boycott Minnesota. It's the safest way to transact business. I can be reached personally at andy@milesfranklin.com, andy@milesfranklin.com, or 1-800-255-1129. Mention the Financial Survival Network either to the gal or person who answers your phone call or in the email subject line, and I will make sure your listeners receive the lowest price in the country and my personal attention. It is our desire to help as many people as we possibly can. I can't tell you how much I appreciate our affiliation together, our relationship that we've had over the years, Kerry, and anything that we can do to help your listeners, we certainly will. And we'll start by offering them the best price in the country. All they need to do is mention the Financial Survival Network. We will email them back. I will personally an inventory list, and hope to earn their business in the safest of ways. State of Minnesota, on top of what we consider to be the finest reputation in this industry, our company, never having complaints, licensed and bonded, one of only 24 companies in the world to be approved by the Mint, A+ rating, all of those good things, that being the U.S. Mint, by the way. On top of all of that, I will personally guarantee and make sure your listeners are treated like family. That's just my way of saying thank you for having us on the show and helping us get the word out. We do appreciate that very much.
I got one final question for you.
Yes.
Assuming all of this comes to pass, all right, we know what gold's going to do, but what about silver? Silver is been trading at depressed levels here, Andy, since 2011. Even now, what is it, $24 and change an ounce? Silver is affordable, in quotes, to average people. We could see the prices of silver go far higher than the price of gold.
So if we look at the 5 previous bull markets in gold, we see something very similar. We see gold move first and silver move further on a percentage gain. When we look at silver, to me, it is the most intriguing of all assets because it's the only one that has a history of both industrial and monetary. It's bracketed on either side by copper and by gold. On one hand, you have copper, which is purely industrial. On the other hand, you have gold, which is almost purely investment or monetary. Silver is both. And so what I see happening is if gold were to really take off, which I suspect it will because of its reclassification, because the central banks are buying it, because it will be part of a new system, I think silver will as well. It will follow. It won't follow the same way, which has been linear and orderly. If we go back to July, we saw silver move up $10 in just a few days. We will see that 50% or over. We will see that again, I believe. But because it will follow gold in its 90% correlation and movement for the last 6,000 years. Not always symmetrically, but it does follow. It often like a rubber band, it catches up and then slingshots. What that will do is I think we'll have a great awakening to the industrials. In this digital world we live in, silver is a necessity. It is the best conductivity. It is the best metal that for conductivity. It is the most reflective metal. It is used in solar panels. It is used in everything that conducts electricity in this digital world. It is a necessity in things like phones and computers and anything digital. So silver is needed by the industrials. If you were to see it really start to take off as a result of it following gold's move, then you get the industrials who will jump in with both feet. Remember that these moves we've seen so far by investors like the Ohio Police and Fire Pension, who invested 5% of the $12 billion pension fund into gold and silver. When you see Buffett put 2.5, these are just toes and rounding errors. When it gets to the knee and into the waist and they jump all in, overnight there will be nothing left for anyone else. The prices will go to the moon, and you will see the industrials have a spiritual experience. They will then jump into the silver market and buy everything that's not nailed down. That's when you see the real move in silver, because if they don't, you can't make your iPhone. You can't make your solar panels. You can't do the things that you need on an industrial basis without it. And so, yes, I think silver is probably the finest investment on the planet. It offers unique upside potential, more so than just about anything I can think of. And it's not just the monetary aspect. Actually, it's both the monetary and the industrial aspect that will give it a supercharged rate of return. And at a almost 80-to-1 ratio, Kerry, that's 80 degrees. That's 80 degrees in mid-January here in Minneapolis. It's an anomaly. That's 4 feet of snow in the Florida Keys in August. It's an anomaly. It's only happened a few times in the last 5,000 years. It's an opportunity waiting to happen. If people wanted to trade some of their gold for silver, this is the time to do it. We'll make it easy. We'll buy it back and make no money on the buyback of the gold and give your listeners the finest price on their silver. No question about it. I look at it as the best investment on the planet right now for privacy, upside potential, liquidity, you name it, demand. It fills, it checks all the boxes. It's the place really to put your money.
All right. I know you're busy. You got to go now, Andy, but promise me you're going to come back and we're going to just dedicate a show to platinum. I think what's happened in that market is it's part of what you were talking about, part of this global conspiracy. We need to talk about it later. I know you got to go and I have to as well. So milesfranklin.com and tell them Kerry sent you and stock up now before you can't get it, because that's where we're heading to for sure. Andy, we'll talk to you again real soon. Thanks so much for coming on.
I'd love to, Kerry. I got a lot to talk about platinum. So whenever there's time, let me know. God bless you, buddy. Stay healthy, stay well, and look forward to picking up where we left off, hopefully somewhere real close down the road. Absolutely.
Hey, any questions, comments, kl@kerrylutz.com. That's the email address. Go to the website, financialsurvivalnetwork.com. Sign up for the free newsletter. Andy, hey, it's pretty dire, but forewarned is forearmed. Thanks.
Thank you, Kerry. Be well, buddy.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.